Good day, guys. Welcome to Forex Walker. Welcome to episode 40. On the previous episode, we had our microphone problems. I'm using the same microphones, but they're doing well for now. So those are the issues that we had, and I had to delay my video publishing. So yeah, on the previous episode, we were talking about the president of the United States being away and those journalists creating some kind of a panic. And I talked about the volatility index. This is the volatility index is correlated with the US dollar. So a spike here, in fact, it is correlated with safe havens. So if we get a spike here, we'll get a spike on the JPY as well, and a collapse on those currencies that are called risk currencies. That's commodity currencies, AUD, NZD, uh, and the euro, the pound, and of also the South African rand. All of those high risk currencies are going to be collapsing, and the safe havens are going to be uh, giving us a rally, and so is the CHF. So here we were expecting a spike because of the panic, and the U.S. president just came in. They He just made a presentation with the media, and they were talking about a budget that was released for the production of uh, interceptor missiles, and they were talking about having the location for those missiles. So I believe that's the reason why the volatility index had eased a little bit here, because the markets they all listen to uh, the US or the US dollar. As you can see, this is the S&P 500 index volatility. So it's a gauge that measures that. And here we had risk coming in, and though as it collapsed, the commodity currencies gave us a spike. This is where you can trade free money. So that's some of the things that can help you in your trading. So here we have the commodities taking off because we're moving. The southern hemisphere is moving towards the closure of the year, and these things that happen every single year. This is silver US dollar, and the negative. Those who don't mind taking a negative carry, they can hold long term, and this thing might get to its peak in between November and December, end of November and the beginning of December. It might end in December. So this is something that happens every year, and for the southern hemisphere it takes off somewhere in August, and for this is what yes, in August and until December, and the movement repeats itself in March. From in fact, you should check it in Feb. It takes off in March to June, so that will be for the northern hemisphere. uh, okay, the closure of the year talks about summer. It's just summer where the businesses are doing well. In the northern hemisphere, they have snow, and they need to clean the roads. So the supply chain in the northern hemisphere is disturbed. And when they move towards summer, which is March, April, May, June, that is summer for the northern hemisphere, and normally you see an expansion in gold and silver. Here we're talking about uh, the Euro USD, the currency pair that is loved by many. Here with arbitrage trading, or here with my channel, we only take short positions only. We cannot take any other position besides the short. So macroeconomically, the US dollar is bearish. It will be bearish. It might not be now, but toward the end of September. So I said it will be bearish in September, and that's what we're looking at. But for now, we're having a bullish US dollar. It will be collapsing soon. So with the euro is also pricing in some sales, but for now we're expecting the euro to at least go up there, and we're actually running out of time because both currencies are bearish in September. So we'll see which currency gets first ahead of the other, and that's how we were planning to take this short-term trade. But at the end, the currency that is more bearish than the other will take over. Macroeconomically, the euro is bullish, but because it's economically correlated to the Danish krona. In fact, the Hungarian forint, uh, yeah, I believe it's the Hungarian forint and the Swedish krona. Those are also in Europe, and they are bearish. So that's how I correlated this back to the euro and expecting the euro to be bearish as well. But in terms of price action, we normally expect the currency pair to come up to this level and that level. This is just an order block. That's how I draft my entries. So it's either coming up here or up there, but both currencies in the long term are going to be bearish, and it depends on which currency is more bearish than the other for us to know which direction to take, whether it'll be bullish or bearish. So, but for now, we have a short-term bull run in the US dollar, which I believe might be taking off from here because let me show you, we had a first touch, second touch, and we have a tiny manipulation here, and that's what I believe might be the last peak before we get the drop. So the market might give us a drop from here. It might give us a drop from here, or give us that manipulation that is bigger than this, which will rest here, and either resting here or there might be satisfying for me. There's the Turkish lira. I was expecting a peak above this shoulder, but it did not give me that. So it just touched here a little bit. I'm not satisfied. Remember, the takeoff, the entry is on the 30th of September. So we're still having enough time to observe the behavior of this market. And we were just disturbed when the U.S. president was away. So here we'll have a AUD USD, and we did get a first touch, second touch, and a manipulation. And the US dollar is currently pricing in some bullish macroeconomics, and that bullish, those who trade hammers and all of those things, they believe that the market is going upwards. My fundamentals are not saying that. My fundamentals are telling me that this is just a market manipulation, which I wish should turn around here at this shoulder here. That's how I trade. I believe it'll come up here, giving us that beautiful manipulation on the third touch and collapsing all the way down there. And it doesn't necessarily have to go all the way down there because the US dollar is pricing in the sanctions and the tariffs. So somewhere, somehow, let me remove this. Somewhere, somehow, the US dollar will give up. So we're expecting something like this in this economic projection. Somewhere, somehow, the US dollar will give up in this bearish move and take off towards the end of September. Here we have the Eurozar. Uh, I will be explaining what's happening with the Eurozar in the next episode. I don't want this video to cut me off. We normally record our videos for 15 minutes, but on the next episode, I'll be jumping into market fundamentals. So those are the things that I'm going to be looking at with regarding the US dollar and the Australian dollar. But for those who love, I want to, I want my traders to focus a lot on this. This is something that happens every year. A lot of people were telling me about how they trade gold and silver, and they normally just hold the daily time frame itself. This is the daily. Most of the time, when I uh, what do they call it? When I analyze price action, I use the daily time frame. This is the only time frame that I understand in terms of trading. So uh, most of the time, the silver US dollar, it does not reverse on the 23.6. The fact that you see it reversing, normally it reverses at the 38.2. So it normally comes back after rejecting from the 50, it comes to the 38.2 and it takes off from there. But once you see it reversing all the way to the 23.6, you need to know that this is the volume that is in the market is very strong. The silver is very bullish. So that's the reason why I believed in this trade. Even though I wanted it to turn around here, this is something that normal markets do, but this is a commodity. Normally, it rejects from the 23 point 0.6 and it takes off forever. Whenever I talk about those 23.6, and I'm talking about this, so we don't count the numbers from and the other side of the zero and the comma. We just say 23.6 or 38.2 or 50% feet. So this is how we interpret the Fibonacci. So here we were looking at the expansion that normally happens every single should I say every single year. It happens twice a year, meaning it happens every six not no not every 6 months, but it happens from towards the end of uh, towards winter. In fact it's something that is seasonal. It happens towards summer. So at the beginning of summer and at the end, which is August to December for the southern hemisphere and March to June for the northern hemisphere. So this is something that repeats itself over and over again. So for traders who are willing to take this to take this economic divergence that happens every year. This is just the secret that you end up having when you trade market fundamentals, economic divergence, arbitrage trading, hedge inflation. Those are things that repeat themselves. Even in hedge inflation, what we do is that we look at the history of the macroeconomic uh, realm and how it affects the markets. And some people they call it backtesting, but when you talk about backtesting, a lot of people talk about price action. When we backtest the macroeconomic environment, how the price action aligns with macroeconomics. I say the when these sanctions are about to be priced in. When I talk about being priced in, I mean the time that which the uh, price action aligns with macroeconomics, or it might be macroeconomics, or it might be market sentiment. But the pricing in of those things is the alignment between macroeconomics and price action. So I normally use the word something being priced in. So that's how I pronounce the back testing. When you back test, you look at the macroeconomics in history and the time that they get priced in, and then you set up your trades and look for the trades in the coming time, and you wait for the time for those macroeconomic reports to be priced in. Goodbye, guys. This is episode 40. I'll see you on episode 41.